Even trying to count 1,000-ounce bars on a pallet, it's very hard. I mean, because the way they're stacked and you don't want to double count it. You got to look at the bar numbers. It's not easy. It's a real process. So that isn't an audit as much as it is maybe publicity. I don't know. But I don't think the gold repatriation has anything to do with that. It's certainly a smokescreen. But it's long overdue. I mean, that should be the first step of a real audit that is done independently, third party, and with great oversight. That's what really needs to be done. But I find it interesting because it's been a hot button topic in this industry for as long as I can remember.
In today's news recap, gold weekly price outlook. Gold has a tough week. The gold market continues to see a lot of noisy trading as the markets are trying to determine whether or not the trend can continue. Gold is currently struggling, but it is still strong from a longer-term standpoint. The gold market has been a very negative market during the last several trading sessions, and now it looks like we have formed a bearish engulfing candlestick. There is a trend line that coincides quite nicely with the $2,800 level. So we may have a week or two of general softness in the gold market, but when you look at the longer term chart, it does make a certain amount of sense considering just how noisy things have been. Now, this past week is a little bit difficult to get a read on, though, because quite frankly, a lot of what could be going on is simple liquidation so that traders can cover other positions that have been absolutely crushed. If that's the case, then I do think gold recovers rather quickly. I will be watching the $2,800 level because it was the recent swing high, and on the daily chart, it shows the 50-day EMA as well, and a lot of noise. So I'd be very interested to see how gold behaves there. This is an ugly candlestick, but again, you have to keep it in perspective. This is a market that's basically gone straight up in the air since roughly September 2022. It's been a massive performer. So ultimately, I think this is a dip that will set up for a nice buying opportunity given enough time, but we have to wait to see when that is. Be patient. Take your time. Don't try to front run the move because quite frankly, we don't know when the pullback ends. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Promise I made to my dad, buying something every 2 weeks for now 35 years. Best gift I've ever been given, to learn the power of compounding, of time and of interest and all that kind of stuff. But I've never once looked at gold as an investment. Yeah, I'm very cognizant of its appreciation, which has been, I remember when gold was $250 an ounce in early 2000s. But to me, gold is wealth. Gold is wealth that has continued to appreciate forever. I mean, go back as far as you want, you'll see that it's kept pace with the cost of living and in many cases outperformed it. To me, that's what it is. It's wealth that if you need to use, you're darn glad you have it. And too many people focus on gold as an emergency hedge, as a catastrophe hedge, as the sky is falling hedge. Sure, I mean, I guess you could say it does that too. But to me, it's wealth outside the system that is private, that I can give to my kids if I don't need to use it. And if I do need it, I'm darn glad I have it. And in an environment where not only are we lied to about inflation and money creation, as we're told it's 3.whatever% now, but John Williams would say, put an 8 in front of that. And so you're at 11 or 12% inflation. So they lie about that. The dollar is continuously being devalued. And in a world of over-leveraged, undercapitalized banks, in a world of inflation and dollar debasement, that's what gold is. It's wealth, and it's there when you need it. It's immediately liquid, and it's universal. So I can't think of a better explanation of why to hold it. The only caveat I would say is that when someone calls me and says, look, I'm buying a house in 8 months, should I do this? I typically say no, because there's too many variables. I would say buy a 6-month treasury right through treasurydirect.gov and remove all of that risk. But if someone says, look, I have a lot extra money, I don't know what to do with it, I want to put it somewhere safe for the future, yeah, there is no better place to put it in my mind than an asset that is continuously, since 2000, it's averaged 9.9% per year. Compounding was up almost 30% last year. And this, so far this year, it's up 8 straight weeks in a row. There hasn't been a down week yet. Doesn't mean it will always do that. It just means that what gold is a vehicle to maintain your standard of living. And we can go back to, 30s with Roosevelt, go back to Roman times, and there's always those analogies, and they are true. You go back to the 70s, in 1971 with $35 gold, right when he closed the gold window, a 100-ounce, COMEX gold. Look at a 400-ounce gold bar from London in 1971 would have been $14,000, and today, with gold at $29.51, that bar is $1,180,400. Did gold go up, or did the dollar lose all of its value? And I say, in 1963, when my dad graduated college, he was making under $6,000 a year, and he said, your mother and I could live comfortably on that, just the two of us. We were married then, he said. Well, how the hell does anyone live on $6,000 a year? Well, back then you could. Did the dollar, or did the cost of living go up, or did the dollar go down? So in essence, what this is insidious, continual inflation eroding the value of the dollar, and gold finds a way somehow to maintain your standard of living, in some cases accentuate it. So you don't buy gold to become wealthy, you buy it because it is wealth. Better than holding it in a bank these days, that's for darn sure.
In today's news recap, gold prices are forecast to rise another 8% this year. The price of gold has surged more than 40% since the start of January 2024, repeatedly shattering records. Goldman Sachs research forecasts the rally in gold will continue amid demand from central banks. The price of the precious metal is predicted to climb a further 8% to $3,100 a troy ounce by the end of 2025, analyst Lena Thomas writes in the team's report. The team's previous projection was for gold to rise to $2,890. The increased forecast is underpinned by higher than expected demand for gold from central banks, which have been increasing their reserves of the commodity since the freezing of Russian central bank assets in 2022, following Russia's invasion of Ukraine. As well as stronger central bank demand, Goldman Sachs research anticipates a boost to the gold price from increased purchases of gold ETFs as declining interest rates make gold a more attractive investment. Those factors may be somewhat offset by speculators reducing their net long positions on gold in futures markets, which is projected by Goldman Sachs research to weigh on the gold price somewhat. Net long positions are currently very high as concerns of sustained tariffs from the Trump administration drive investors towards safe haven assets, including gold. But continued uncertainty, whether it's about tariffs, geopolitical risk, or fears about high government borrowing, could also push speculators to increase their long positions in gold. This scenario would drive the gold price as high as $3,300 per troy ounce by the end of 2025, Thomas writes in the report. Now we'll show you more clips of the latest interview, but first smash the subscribe button and check our pinned comment for some massive offers on NordVPN. If you're a serious stacker, this is a perfect fit for you. For less than $4 per month, you can protect your online activity from prying eyes with the most reliable VPN on the market. And believe me, the only thing you'll regret is that you didn't get it 6 months ago. Let's get back into the episode.
And you keep enough money in the bank to pay your monthly bills. And if you need to sell gold and silver to add to your cash stash, you can do that. A glint I talked with Jason about that today, the CEO of Glint and the founder. to me, the real utility in glint is just what you said. I mean, I got extra money and I use it for certain things, but I don't want it in the banks that are wickedly over leveraged and undercapitalized. And I think too many people have let that problem go by the wayside, and it's not resolved yet. I think there'll be more bank failures. So keeping it in an account in Zurich rather than in a bank account here in the States is not a bad idea. But look, how do you become your own annuity? How do you become your own bank? How do you do all of that? You do it by accumulating assets and like gold and silver, which then can be monetized if you need to. It's keeping it out of the system. It's not an easy thing to do, and it's rather unconventional. I am not the poster child for Finance 101, and quite frankly, neither are you. But yet, I would argue we probably both sleep well at night, and our portfolios have probably done better than most of the index funds. Certainly better than the S&P. Much better, and without the counterparty risk. So, you're your own bank. I'm my own bank. If you are doing that, it's important, I think, to have a good portion held in a depository to give you immediate liquidity. And you don't want to have, your house filled with gold and silver, security risk, and those kinds of things. I mean, you can have some, certainly, whatever degree that makes you feel comfortable, but our Brinks programs are a perfect vehicle for that, where, I have a lot of people who have a lot of metal in Brinks, and they'll say, I need $100,000 this week. Please sell, 40 ounces of gold for me. Done. Bang. And we wire them their money. So in essence, they are their own bank. But in a world that is becoming far more complex, far more interconnected, the term you use is systemic, it becomes a challenge. But it's not a bad idea. I think that breaking free from the traditional norms of what is normal, what is conventional, is something I've never had a problem doing, and it's typically worked out well. I think it means trust your gut. And if your gut tells you get the hell out of the system, then do it. And to whatever degree that means. But in terms of liquidity, if you have the ability to keep, let's say, a certain percentage, whatever that amount means to you, in a depository where you have immediate liquidity physically segregated, like in one of our Brinks depositories, yeah, you would then have instant liquidity within just a couple of days at worst, where we can wire you your funds once Brinks moves the metal, rather than leaving it inside of a under capitalized, over leveraged banking system where, the fractional reserve system is that if everyone runs to that bank to get their money, just a couple will get it. That's just like we're seeing on the LBMA right now. That's just like Bernie Madoff. It's a scam. And it is. And yet no one's ever done that, because usually you don't see a run on the banks. But are we watching a run on the LBMA in real time? Does that maybe open people's eyes? Maybe we're not. Maybe we are. Only time will tell. But it's this type of what we're seeing certainly could be. Looks like it could be. And we'll see how it all plays out. But I don't find those kind of decisions crazy. What I will tell you is that if you are one of the people who wants to do that, don't go to anyone mainstream and tell them what you're doing. They're going to lock you up. I mean, again, people would think I'm crazy for doing what I've done, and I've done it for over 20 years. And I've never missed a minute of sleep, and I've turned out just fine. Trust your gut. And in the end, you only have yourself to blame.
What do you think about Andy Schectman's insights on the BRICS nations, the silver squeeze, and the potential explosion in gold and silver prices? Are we really on the verge of a massive shift in the global financial system? Let us know your thoughts and predictions in the comments below. Do you see silver and gold skyrocketing soon, or do you think the squeeze might ease up? Let's discuss it. Now check this video right here because it's a perfect fit for you, and I'll see you on the other side.